Is Circle positioning itself to shake up the future of cross-border payments? And is XRP under real threat? Imagine two different modes of travel, airplanes and trains. Most of the time, airplanes and trains cater to distinct groups of travelers. But occasionally, their routes overlap just enough to make a difference, perhaps even drawing passengers away from one another. Now, apply that analogy to recent developments in the crypto world, and you'll see why so many eyes are on Circle Internet Group's CRCL latest announcement, the launch of ARC, a cutting-edge Layer 1 blockchain focused squarely on stablecoin-based finance. And here's where the tension ramps up. ARC's core features seem to directly challenge what XRP and its blockchain, the XRP Ledger (XRPL), have traditionally done best, facilitating swift, low-cost international payments, managing foreign exchange (FX), and settling transactions for trades. So the natural question arises, is ARC about to become a major rival to XRP? Breaking down Circle's strategic leap. First, let's get clear about Circle's intentions. For anyone new to the space, Circle is the organization behind USDC, the second largest stablecoin in the market, with a valuation of around $68 billion as of mid-August. With ARC, Circle is making a bold move to provide stablecoins with enterprise-level dependability on an open, public blockchain. This isn't just a technical upgrade. It's a direct effort to increase USDC adoption and, by extension, Circle's revenue. How? ARC is architected to use USDC as its built-in DAS, meaning users pay transaction fees in USDC, which are both stable and predictable since they're pegged to the dollar. Moreover, the platform will offer a 24/7 institutional FX engine for real-time on-chain price discovery and settlement, crucial for international money flows. Transactions are designed to clear in under a second, and there will be opt-in privacy features for sensitive transactions and account balances. What's more, ARC will be compatible with the Ethereum Virtual Machine, EVM, which is a smart play to attract developers and lower switching hurdles, mirroring XRPL's recent move to EVM compatibility as well. This means developers can use familiar tools while building on ARC or migrating from Ethereum. The rollout will start with a private testnet soon, followed by a public testnet in the fall, and a full mainnet beta targeted for 2026. Behind the scenes, USDC's explosive adoption is setting a new standard for stablecoins. Circle reported circulating USDC of $61.3 billion at the end of the second quarter, surging to $65.2 billion by early August, a near 90% annual growth rate. The stablecoin sector as a whole now comes close to a whopping $260 to $280 billion. This growing user base could provide major momentum for ARC once it's live. But does this spell trouble for XRP? Now, let's get to the heart of the matter. Is XRPL's dominant role in the payments and FX niche in jeopardy? It's undeniable that ARC's focus overlaps significantly with the XRPL's established strengths, especially in international payments and institutional money movement. So yes, there's a real chance that ARC will begin encroaching on territory XRP has long claimed, potentially capturing a share of capital flows in these markets. But here's the part most people miss. That doesn't mean XRP is finished. Not by a long shot. XRPL has distinctive advantages, particularly for enterprise customers. Its compliance tools are built right into the protocol, making it much easier for regulated businesses to enforce Know Your Customer (KYC) requirements without having to develop custom solutions. This reduces operational headaches, and once an issuer is set up on XRPL, moving to another network is rarely worth the hassle unless the benefits are substantial. Not to mention XRPL's hallmark low fees and speed are already industry-leading, features that ARC might match but will struggle to surpass in any meaningful way. Let's not forget that Circle's approach to market is also different. ARC is positioned to appeal directly to fintech companies and businesses already using USDC, promising an integrated, simplified path with reduced implementation risks. Most of these users were never in XRP's target market to begin with. as they're already embedded in Circle's ecosystem. Controversy alert. Could ARK's potential to pull away capital and partnerships from XRPL become a self-fulfilling prophecy? Or will XRP's proven integrations and regulatory tools help it outlast this new challenger? So, what should savvy investors make of all this? Most likely, ARK and XRPL will end up dividing the landscape rather than one completely overtaking the other. XRP will probably continue as the go-to options for enterprises needing highly customizable asset rails and payment corridors, while ARK may carve its own territory among USDC-centric users. If you're an XRP holder, the best move is to stay vigilant but avoid panic. Watch closely as ARK launches its public testnet and begins courting payment partners. If ARK rapidly converts USDC distribution into robust on-chain settlement, some market share could migrate. On the flip side, if XRPL continues to innovate and onboard new enterprise issuers, its value proposition remains strong. But what do you think? Could Circle's ARK fundamentally disrupt XRP's position? Or is there plenty of room for both to thrive? Do you believe the stablecoin war is just beginning, or are these projects destined to coexist? Drop your opinions below. Let's get the debate started.